You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rocking tune can mean only one thing: a new year, a new decade, a new slate of the option block coming at you every Monday and Thursday right in your ear holes. They're live noon Central, 1 p.m. Eastern. My name is Mark Longo. Going to be guiding this crazy option ship for you over the course of 2020. Hope you had a great new year. Hope you celebrated well, wisely, responsibly, all that. Not too responsibly, a little bit responsibly. Hope the new year is off to a good rollicking start for all of you out there. Certainly off to a fun start for us here on the old show, if perhaps not the markets. Well, I guess that depends on your point of view. And joining me once again to help me break down and just sort through the crazy clutter that is the marketplace going into 2020. Got my usual cohorts, my partners in crime. Let's start off once again. Let's check in on that sleepy hamlet known as St. Charles, Illinois, where we are joined by none other than Uncle Mike TOSAW from the appropriately named St. Charles Wealth Management. Uncle Mike, Happy New Year to you. How do you guys usher in the new year in St. Charles, sir?
We actually took the kids up to Sheboygan at Blue Harbor Resort and Indoor Water Park and did it up there. So that's how we did it.
That sounds pretty cool. So you got the heck out from underneath the weather shield and you left the cozy confines of St. Charles. Heresy, sir. That's why you were in parts unknown for so long. Now he's back. You can hear him, listeners. All is right with the world again. And also joining us from parts not quite unknown. They're more known. They're just way the heck out there. The hinterlands, we call them here on the show. The far, far reaches on the shore, the misty shores of Maine, where we are joined once again by the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com by way of Carmen Line Capital. Mr. G, welcome back to the program and Happy New Year to you. Same question for you, sir. How do you guys usher in the new year in the hinterlands of Maine, sir, while you're not fighting for your life from the clam pirates?
I actually have the clam pirates did a drive-by New Year's Day. They were in the airboats and it was about 32 degrees or whatever. It seemed like they buzzed every inlet on the coast. I don't know. It was a way for them just mocking everybody. But what did we do? I'm trying to think of what I did. Oh, I didn't do very much. I think I built a snowboard rack for outside. That's what I did. So, there was some ice skating and things like that, but it was a pretty kind of wintry New Year's Day type thing. Not a lot of action, though, by me.
Not a lot of action. Well, let's see if we can jazz that up and find some action in the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for The Trading Block.
All right, everybody, welcome to The Trading Block, where we talk about what's trading for the first time here in 2020 and indeed in the decade. It just sounds so crazy to say that. And we're kicking it off, we're still dealing, it seemed like the trade war was the big thing, and of course it still is. We still haven't signed any documents officially yet, but now we have new headline risk making its way into the marketplace. Of course, we talked on Vol Views last week, our first new show of the decade there on the network, where we talked about all the quote-unquote assassination volatility that's going on in the wake of this taking out of the Iranian general and the escalating of tensions there in the Middle East as a result. And the markets coming into showtime today are kind of weirdly mixed. They're not really sure what to make of what the heck's going on out there. The saber rattling going back and forth between the U.S. and Iran and all sorts of other fun stuff playing out there in the marketplace. We got the NASDAQ leading the charge to the upside right now, up nearly 0.25%. So the tech-heavy world not caring about Middle East tensions. We got the S&P kind of the Goldilocks, kind of scratching his chin, saying doesn't know what it wants to beat today. Unch to slightly off on the day, but not really a huge move in either direction right now. And we got the Dow leading the charge to the downside, off almost 0.15% there on the downside. And, of course, gold getting a nice bump, 1566 over there. So the metals liking a little bit of Middle East turmoil out there. That's kind of their MO. Go figure. And WTI right now, actually, Unch still at that 63 handle. We've been saying for a while on TWIFO, which will be back this week as well. So all you TWIFO fans, look forward to that. Crypto Rundown coming up a little bit later today as well. So a lot of fun stuff in store for you guys this week. But a lot of our listeners out there have been saying, what can it really take to bump WTI up much north of that 60 handle? What's going on with that call wing when we get a bid to those calls? Well, WTI at 63 now, and so we'll see if this is, when we get to TWIFO, if this is being played out in the call wing as well. If this is showing some longer-term love, or this is just a near-term blip. Speaking of blips, we got a blip going on in the vol space right now. We're seeing our old friend VIX Cash hovering right around that 14.5 level, which puts it pretty much unched from our last show, a decade ago. We were last talking about all this fun, crazy vol stuff. Our old friend VVIX coming off a little bit. It was getting frothy, getting a little top-heavy, threatening to break into that triple-digit level. Now, not so much, down a little bit shy of the 94 handle, about 93.65, puts it down about 6 handles from where it was this time last show. And our old friend VXX, a.k.a. the gift that keeps on giving to the downside, giving a little bit more again to the downside after having the temerity to go back up for a little bit. Down about 1/3 of a handle, puts it right around a 15.30 coming into showtime. Let's go back around the horn, the order that we went before. Let's start in the land of St. Charles. Uncle Mike, I know you like yourself a bullish market, not quite getting that out there, but you also like yourself a little bit of action in the metals. So what is lighting up your tape to kick off the new year here in 2020, sir?
All sorts of fun stuff. So we start the year off. We have a massive rally for the first day of January, so everyone's excited. And then we go and attack Iran. Not saying if that's good or bad for the general country. I'll leave that up to the listeners to decide. But for the markets, in looking at it, typically when something I don't necessarily, bad is necessarily the right word for it, but when something crazy like this happens to the markets, a lot of times there's a reaction to it, which this time was no exception. I mean, I remember just watching the futures at night, and that's how I get my news, by the way. I see if the market's moving that much, then there's something going on. If not, then there's really nothing going on. So seeing the S&P futures drop roughly 40 points at about 7, 8 o'clock at night, whatever it was, and Chicago time, made me look to see what the heck's going on here. And that's when we found out, of course, we had killed an Iranian general on an airstrike. And so with looking at that, the market did react to that, but it gained a lot of it back the following day. So in going through a lot of these things, what I had done was just kept myself long premium, didn't want to sell a lot of things. And so in doing so, that protected me or helped me to rest easy, so to speak, over the weekend. And that if we were to have a major downturn, just had a little bit of long premium going on. And I think I'd even mentioned it on the show a little bit on Thursday, or I'm sorry, probably maybe a week ago, Thursday rather, and that when looking at that, we actually were able to, you're able to just kind of sit tight during the holiday week. I'm typically more of a long premium fan the holiday week because it's not going to be a lot of vol coming out most of the time. And if we do have a major event, I really prefer not to be short a lot of premium and get caught with my hand in the cookie jar, so to speak. So when looking at this, I think that, yes, this is an issue with what's going on in Iran, but it's not much of an issue because of the fact that we had new all-time highs on the opening day of trading this year on Thursday, roughly 325 for SPY, and we're just under 323 right now. So we're roughly 2/3 of 1% off of our all-time highs in the marketplace. So I think this could be a very exciting year. And when the smoke clears, it'll be interesting to see now that we have the big money back in the market, since a lot of the big money was probably on vacation the first day of trading, but the Hamptons or the Poconos or wherever it is the big money goes. Now that we're going to have more volume and more big money in the market, once the smoke clears for this Iran thing, then we might have some bulls coming this year. But in the meantime, I think you'd be very wise to heed caution and choose your entry points wisely.
It does almost seem you're right, and obviously this was hopefully a much more well thought out decision than this, but it does have the air about it, at least from a market's perspective, of Washington saying, there's people are already over this trade war thing. We need to inject some new drama into the marketplace. Here we go with this drone strike. You thought you were complacent, you thought you were done, you thought you were kicking off the new year in a nice, tranquil, conciliatory tone, détente in the trade war. Nope, let's add some new vol somewhere else over there. Hopefully not the case. You're right, timing-wise, it certainly did feel at least a little bit like that. Mr. Rock Lobster, same question for you, sir, while you're dodging piracy of your own. Hopefully no drone strikes are happening yet out there in the hinterlands, but we shall see. You guys live by your own law out there. Aside from that, what is lighting up your tape here to begin this year? I was talking with your cohort, the greasiest of meatballs, on our first show of the new year, indeed the decade, on Friday, Volatility Views. And he and I were kind of remarking then, didn't seem like, you'd think, you read the headline, you see what's going on, you'd be like, oh my, there's going to be a lot of vol coming into the marketplace. Market's going to sell off pretty hard. And we saw a little bit of both, but perhaps nowhere near the degree that he might have assumed, given the headlines that were playing out across the board. Was that your take as well, Mr. Rock Lobster, to kick off the year, that maybe the markets were, I wouldn't say shrugging this off, but not quite exactly tumbling into the abyss like you might have feared, sir?
I would agree with that. I mean, I've got some, I do own some long sort of downside premium, balanced by some short vol. It has not been a very good trade for the last 2 weeks because basically vol is flat to up and the market's up. So it's been a big zero, a negative at least. And every time we get the sell off and then the downside's about to kick in and make some money, we stop. So we're really lacking the, it's weird because I think a lot of, and as you trade, and how when we first started trading or first started looking at options, I started in 1989, right? So it was a while ago. And how things just change, and how the business changed and everything evolves and all that kind of stuff. But I feel like, there's news now comes at us sort of in different ways and how it affects the market differently. So you can be reading like the Twitter sphere and everything is just, it's like doom and gloom and Armageddon, and because everybody has an opinion, right? And, and there's like multiple things coming through feeds and it's reached. So there's like that network effect just makes, what could be still a big event, right? It makes it feel bigger than it actually is. And then the market seems to sort of, by the time it gets at equities, they seem to absorb it. The market does a good job of sort of discounting known information. And that's what I felt like this was. Like it was an event, but then when you dig into the actual news of it, there are all these militias that have been there for a while, and you can go through the politics of it, but it's not like it was exactly a new thing to people that knew what were going on in, Iran, Iraq, and all that stuff. So there's been a continued escalation. I don't know how far it's going to go, if this is going to be the end of it. But we have higher vol from the lows last week. I think we trucked in like a 1246, which is the low which was the low since prior to Christmas. So whatever bid for vol was coming through the holiday was gone, and then the embassy thing happened. And at the first, when I were talking to the pit crazies, I thought that the embassy being rushed in Iraq seemed odd, like it was a strange event. So I know it doesn't happen all the time, but in my head, I'm like, I wasn't quite. I thought that was provocative, and then you find out it possibly was these Iran guys or whatever, that Iran militias that sort of ordered it. So basically, what looked like it could have been really bad, by now the market seems to have been discounted quite a bit. That's my general, the short way of saying it. So I don't know what else will happen, because that's a tougher thing to predict. I just read sort of the tea leaves on it as far as where the VIX futures are, and I put out a tweet not long ago of that front end of the curve. So usually when I look at the VIX futures is it's very much like kind of a pressure gauge, at least the way I look at them, on how the market feels VIX cash is. So those futures really, they're very interesting. You look at one thing long enough and you kind of see patterns. And it just looked like the front end of the curve should have been kind of a little more expensive than it was. Generally, to me, that is a signal that VIX cash is actually going to move like a point or more, within a day or two. Don't know which way, but usually, historically, that's kind of what happened. And since I put that out, we've had a little bit of movement in VIX. I don't think of the move. It takes usually a day or two to come out. But I think the vol, at least for now, the market is starting to cycle through the volatility. And we probably go back to, TOSAW's, greatest bull market in history happening again. So I think the market's absorbed it. I think a lot of the Twitter sphere absorbs a lot of the noise, and it doesn't really filter past that. It kind of gets stuck in social media, and really nothing goes anywhere there. So then when you actually see, you're looking at, how the market is reacting, there could be that quick reaction, and then things pull back quite a bit. And the VIX futures curve is a great place to look at really how the market reacts. So as of right now, it's starting to pull back and normalize very slowly. That's what I would say. The future market is pulling back, but it could certainly, VIX could give back at least a point of its gains very, very fast. So anyway, that's how I'm kind of positioned. And then we'll see what happens. So, but as far as the only thing I would say now is what's our excuse to go higher and make new highs? We are looking for a trade deal. I believe it was January 15th, but that's always it's so secret. Everything is such a secret thing about a trade deal or whatever. Is it really happening? I believe that was the last date that I could see that something was supposed to be signed. They're taking 80 days to translate the document or something like that. I thought you could just read it into Google and it would just translate it for you in about 3 seconds. So I don't have that. I don't have the technology thing squared away. But and then we'll see what happens. So I think that 15-17 cycle, the Jan 17 cycle could be one of those inflection cycles where you could see a lot of movement on the ball space. Again, if this Iran thing is worse, the move is up. But if it all kind of just peters out after all the noise, we'll see. We probably will see vol lower. Could be much lower, back to the low 12s again. Because ultimately that's what drove us up in the first place, the vol up in the first place. So nothing happens. How long is the vol going to stay bid for? That's what you have to ask yourself. So I think that's where we are. And the only thing I will say is, and maybe TOSAW comment on it later, the shiny stuff is, I can't remember the last time, because I just look at GLD. I owned a little GLD. When it was this high, when was the last time it was this this high. I think we're at a 1 year, easy a 1 year high. So surprising. And the bid hasn't really gone away either. So I would say if you're looking at anything, keep an eye on the shiny stuff as a bit of a hedge or something that could potentially move a lot. I mean, you're looking at it. We were trading like 140 not very long ago. So again, another big potential move in gold as well. So just looking to see either this vol really dissipates fast or, the run in gold is puzzling, though, I will say.
Yeah, we're looking at levels right now in gold that we pretty much haven't seen since about 2013, so about 7 years out there right now. Can't quite make the 1,600 level right now, but day is young, the week is young. We'll see if we can break through that. But yeah, looking at about 7-year levels here out in the shiny stuff right now. Give you some historical perspective for where we sit right now. Let's see where the market sits coming into the latter portion of the trading block, and a fairly active day given the fact that most of the major indices can't really seem to decide what they want to do today, where they want to go, what they want to be today. VIX doing decent paper, not a ton, a little bit north of 250,000, about 275,000 on the tape. The ADV right now a little bit north of 400K out there. SPY doing about 1.5 million contracts right now. The ADV is about 2.5 million. SPX closing in on 800K. The ADV about 1.2 million, so decent volume out there in the S. The Q's closing in on 400K. The ADV about 475,000. And the IWM doing about 187,000 right now. The ADV is a little bit shy of 300K. And going on out to the top 10s, what is lighting it up out there? A little bit different story in the top 10 most active individual equity options. A little bit decent paper going on out there. Number 10 cost you $1.23 to break into the top 10. That'll get you tied for number 10 and 9 here. Number 10 is BP. I haven't seen BP in the top 10 in a while. 123,000 over there. Number 9, Roku, our old friend Roku, a perennial top 10er these days, also at 123,000. So those two neck and neck. Number 8, good old Bank of America with 126,000 contracts on the tape. Number 7, Amazon. The old Amazon there, $1.40 on the tape. Number 6, NIO. Once again, going back to Chinese electric cars, NIO, 143,000 contracts on the tape. That should probably give you a hint of who else is on this top 10. Just saying. Number 5, Facebook, 175,000 contracts. Number 4, good old GE back in the top 10 there again, 176,000. Number 3, I hinted at them earlier. Yep, they're here. Tesla. A meager 192,000, but that's enough for the top 3 spot here today. Remember, they're just doing 400K not too long ago, but now today a little bit shy of 200K. Number 2, AMD, 223,000 contracts. That means you can probably guess number 1. It's a day that ends in Y. Chances are it's Apple at the top of the game, and that's what's happening again today. 460,000 contracts on the tape. Maybe some of that coming on the heels of that Golden Globes snub they got last night. Tim Cook in the audience and Ricky Gervais saying they run sweatshops in China. That was an interesting moment for folks. I have a feeling that's not what's driving this paper out there, but it'd be funny if that were indeed the case. Speaking of paper, let's look at the numbers for the year. Yep, they're in for 2019 now. We can now say officially that 2019, as I pretty much predicted at the start of the year, I didn't want to be the grump, the curmudgeon, but it kind of seemed like it was a pretty tough bridge to get to beat 2018. Look at all the crazy things that happened in 2018, not the least of which being the VVIX, and then it went off from there. There were a number of crazy things that happened that drove a lot of the record volume in 2018. It seemed like that was a tough task for 2019 to beat that, and that was indeed the case. OCC total numbers are in now. They cleared over 4.9 billion contracts in 2019. That puts it at the second highest year ever. So a good year by any other measure, just not outpacing that crazy record year of 2018. The numbers obviously also in for December, too. December volume was down 4.2% from 2018. So let's break it all down here a little bit. 2019 total cleared volume. Now remember, this is everything OCC clears. That's 4.97 billion contracts. Now they clear a lot of stuff in there, but that still is the second highest they've ever done. That's down 5.1% overall total volume from 2018's record total of almost 5.25. billion contracts. Remember, all of that wasn't options. I think options were about 5.01 billion or something along those lines. So they have stock loan, they have futures, they have a bunch of other stuff in that number, but mostly options. Let's put it there. The ADV in 2019 was 19.7 million contracts. Pretty good, about 19.75 million contracts, obviously lower than 2018, but still a pretty hefty amount of volume. DEES numbers as well. DEES total cleared volume was about 418.4 million. That was down 4.2% from DEES of 2018. Remember, December of 2018 was a crazy month. That's when we saw the great nadir for the year. Everything sold off on Christmas Eve. Didn't quite see that this December, hence the lower volume numbers. Let's break these down a little bit more. Let's get into the actual listed options. That's what everybody's here for. Total exchange listed options volume for 2019 was about almost 4.9 million, 4.899 million contracts. That's down about 4.6% from the 2018 level of about 5.1. I was a little low, actually. I said 5.01. It was 5.1 billion contracts in 2018. The DEES total volume was, for options was 411, almost 412 million contracts. That's down 4%. Let's dive in a little bit more. Equity options, they did a total cleared volume in 2019 of 4.4 billion contracts. That's down 3.3% from 2018. DEES equity options volume was 373.8 million contracts. That's down 0.8%. That total includes cleared ETF options volume of about almost 1.8 billion contracts. That's down 11.3%. ETFs and indexes have kind of been where the weakness has hit the hardest here. DEES 2019 cleared ETF volume was down 25.9% to 146.3 million contracts. Overall total index volume for the year, index option volume, was down 15.3%, so another weak spot there with about 478.5 million contracts. DEES index volume also down about 26.8%. That was 38.1 million contracts. Futures, of course, they clear futures there too. Most of that being VIX these days. The Bitcoin futures kind of going the way of the dodo. Futures volume in 2019 at OCC, 77.9 million contracts. That's nearly a 26% decrease. We said this before. The futures have not exactly been lighting up the tape. Part of that, of course, because the Bitcoin futures went away, even though they weren't doing a ton of paper. But also, this is still kind of in the wake of the death of XIV and other products that really drove a lot of rebalancing and readjusting paper out there in the VIX futures. Nothing has really come along to replace that yet, hence these still catastrophic numbers to the downside. We'll see if this much ballyhooed SVIX, as everyone's talking about, maybe that could kick it back on. We'll see. I'm sure the VIX futures folks wouldn't mind seeing something new come along to drive that number there. DEES futures volume, 6.4 million contracts, down 16.5% from December of 2018. There we go. All right, let's dive on into some more fun stuff. It's, kicking off a new year. Let's keep some fun stuff going with a little bit of the old odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, we're just going to do a quick dust-in on the old odd block today because I want to make sure we get some of you listeners on the show to kick off the new year here in style. But before we do that, let's get to paying off some of this just increasingly deep bench of trades we need to keep an eye on here in the odd block coming from 2019. First up, we're going back. We're setting the Wayback Machine not too far, back to December 19th. Can you remember that far back into the distance? Back a whole decade now, it seems like 10 years ago. Crazy how that could possibly be. When we were talking about some, looked like mid-market calls at the time in our old friend Viacom. Now, this was a bit of a weird one because I think part of this has to do, obviously, there's been some corporate action with CBS and Viacom of late, so that usually tends to wreak havoc with the tickers as a result. And that's kind of what we're seeing here because we were talking about, and what looked like was being disseminated, at least here, on different platforms have different tickers for this, which makes it confusing. There's Viacom Class A, there's Class B, and according to at least some of the vendors here, there was a Class C as well, which is kind of hard to find on other platforms. They refer to it kind of as Class B. So again, I think that some of that is just due to the drama of what's going on the corporate action side. I know if we look at some of our other vendors, they call it just VIA B. Others are saying this is still called VIA C, like Trade Alert and others. So it kind of depends where you look, what the ticker is. But we were looking at these, what were at the time called these VIA Class C, January 43 half calls expiring on the 3rd, so last Friday. They went for 45 cents. Mid-market leaning towards the offer there ever so slightly. They went up 10,300 of them printed there. Total of about 13,000 on the day. This was kind of a weird one, not just for the ticker, Mr. Rock Lobster, but also because it was kind of hard to parse what the heck was going on. And as whenever there's some corporate action paper going on, usually there's something else happening behind the scenes. Maybe they have some other peers trades going on against this. Maybe they're doing something to bet on this merger not working out within a certain interval. Maybe they are. There's a lot of things being played out here. So the ticker noise was just some of the fun. But digging into these contracts and looking here, the stock, such as it was, had an interesting range. 52-week low, 37 and a quarter or so early December. 52-week high of about 42.66 a little bit later in December. Right now, it's kind of hovering in the low 40s yet again, but not enough to break that 43 half strike. So these bad boys pretty much looks like they went out worthless. There were still about 12,000 of these open on Friday expiration, and nothing really traded for any size on Friday. So, Mr. Rock Lobster, what's your take on this whole kerfuffle of Class C/Class B calls? And do you concur that this looks like it was pretty much, whichever way they went up, overwriting them or buying them, these bad boys pretty much went out worthless, sir?
I'm seeing like these went out kind of worthless. These mid-market ones, I thought when we talked about this looked like kind of some sort of right action. It was a hard time believing somebody bought these things but you know, I could have sworn we thought this could have been like some sort of buy righty type trade. But as of right now, I'm looking at VIAC's trading $41, $41.69. So it looks like they really didn't get a whole lot out of these bad boys.
Yeah, you know, you're right. Hopefully it was right, because that seems to be the better way to go. Putting in your pocket, then if you add in all 13,000 that kind of went up that day, not quite 600K, about 585,000. So a decent little chunk of change if indeed they did right. These, if they bought these, I agree, it does seem a little less likely. That was a pretty aggressive bridge to have to cross in the time frame of these options, and indeed with all the merger drama going out there, didn't seem too likely. So it seemed like a bit of an overwrite. And if that's the case, looks like our friend probably did all right, pocket in somewhere in the neighborhood of probably 500K. Again, total about 13,000 traded that day. Let's move on to our next name here is another one. We're going back a little bit farther this time. We're dialing the Wayback Machine all the way back to October 14th of last year. That's when we talked about our old friend Apache Corporation, ticker symbol APA. And at the time, what went up looks like a pretty much our old friend, the Call Palooza, some call love out here in Apache. In particular, there were the Deast 25 calls going up at the time 12,500 times for 60 cents, pretty much right off the offer there. These were opening. A total of about 20,000 went up on the day. So this was a pretty sizable print, sizable trade here for Apache. Not exactly a name like Apple that's lighting up the tape day in, day out. Let's look back at how Apache has been doing. Right now it's trading about 25 and a half. So these calls would be in the money for a wee bit. But that's not going to tell the tale of expiration, because these expired, of course, last month. And let's see, at the time that this trade went away, looks like it was a bit of a timing issue here, because the stock closed at $22.62. So the 25 strike, not quite in the margin of error there. And looking at the numbers, looks like about 25,000 of these bad boys were still open on expiration. So looks like these bad boys went out worthless as well. And given the fact that this seems like these were opening buys, you got to figure our friend felt a little bit of a sting on these bad boys. That puts them down about 750,000 on that initial print. If you add in all the flow on that day, and again, It could not have been all of them, but a lot did trade on that strike that day, about 20,000. If you factor all that in, a little bit north of $1 million, maybe about 1.2 million, all said, kind of going the way of the dodo. Mr. Rock Lobster, is that your take as well? You think our friend was buying, and if so, does not appear to have worked out in his favor, sir?
I don't see how this could have worked out for this person. You've got 60 cents. Looks like a purchase. This is my area for 2020. By the way, like these kind of forgot about oil producers and stuff like that. They, even with this whole Iraq thing and all Iran and worries here, there, and everywhere, there's just these things just aren't moving a lot. It's kind of it's sort of surprising in a way. I mean, you would figure that oil's going up, but these producers, man, they are stuck in the mud. Maybe everybody's just happy buying tech, so nobody's ever going to buy an oil stock again, or a producer or anybody like that. But it would not surprise me. But yeah, I mean, we're treading around here from that level. It's just, I don't see how they made a whole lot on these, if they made anything, to be honest.
Yeah, it doesn't seem like these bad boys, even if you were trying to aggressively scalp, wasn't a lot of opportunity to do that either. So we have to factor this bad boy into the probably loser. So we got one probably maybe winner, and one looks like pretty definitely a loser. So we're kind of 1 for 1 here on the old odd block today. But like I said, I want to keep rolling, let you guys get in on the show a little bit to kick off the new year. So without further ado, let's do a special New Year's kickoff edition of the Mail Block.
It's time to take your seat on the All-Star Panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Want to get all of you here on the show. Thank you for sending in so many great questions. We love them. We love hearing from you guys. We love seeing all your fun, sometimes outlandish thoughts on a wide variety of topics. You guys don't hold back, and we love you guys for it. Keep that fun flowing over here. Speaking of the fun, we kicked it off last week. You got about 1 or so days left to play if you want to play. And by the way, we are still tabulating the results from last year, so we don't know quite yet who or if there was indeed a winner within our 1-point margin of error for Guess the VIX, but we had some good guesses last year, so well done. I doff my cap to all of you, even if there wasn't a winner. This year, bunch of you are still playing along right now in our Guess the VIX, Guess the Spikes, Guess the Volatility for the end of the year game. And right now, again, I gave you those same zones as last year to keep it as simple and straightforward as it was last year. The low zone, 8 to about 11.99. The normal zone, 12 to 16.99. The elevated zone, 17 to about 23. And then, as I call it this year, the crazy town zone, which is just north of 23. Dogs and cats living together. A lot of people chiming in with their thoughts and individual opinions out here. We'd love to see that. Get more of those in. You got to chime in with an individual pick. Remember, if you want to be entered to win the hashtag fabulous prizes. Mr. Rock Lobster, where do you think of those 3 zones? What do you think is leading in our polling right now, sir?
So polling for next year for end of 2020, right?
All at the end of 2020, yes.
I'm going to say zone 2, the zone that is what we'll just call the meh zone for option trading. Not the zone of the monk, but the zone of the meh.
The zone of meh. Uncle Mike, do you concur with that, sir? You think as Mr. Rock Lobster calls it, the meh zone? I wonder where he got that from. Or indeed, as we put it in our poll here, the normal zone, the 12 to 16.9. You think that's winning, or you think something else is winning, sir?
I think that one's winning, actually. So I'm going to go with the zone. I'm going to rename it that as opposed to the meh zone.
Well, you are both correct. Right now, our listeners are feeling a whole heck of resounding meh. A little bit of normalcy. The 12 to 16.99 zone has about 44.5% of the vote. Then number 2 is elevated, 17 to 23 at the nearly 29%. Then we go to Crazy Town, nearly 17% of you saying we're going to have some good vol to end the year. And then the low range back in close to single digits, if not a little bit north of that. Almost 10% of you feeling that. So a nice diversity of opinion, which I kind of like to see. That's what makes a market, right? All right, let's go on to some of your feedback. You guys have about a day left to play along in there. Maybe we'll take your submissions for a little bit longer if we're feeling charitable, but we have a lot to sort already. All right, questions. Let's see. I like this handle, Option SIBO. If you're not with the SIBO, maybe watch out. They may say they want that handle from you, but we'll see. He or she's saying, hello. Well, hello to you. First, I wanted to say thank you for providing the best options podcast. Wow. Top-notch and extremely grateful for them. There are a lot of different options podcasts that you guys offer. Well, thank you, Mr. or Mrs. Option SIBO. We appreciate that. We try to give you guys quite a smattering, quite a choice when it comes to options content. So we are grateful. Thank you for your thanks. He goes on to write, if someone wanted to learn from A to Z about options, with the end result learning more about trading vol the option pit way. Oh, interesting. Which podcast/show would you recommend? There are so many episodes and show options that I am just confused on where to start. But also wasn't sure about starting with episodes that are several years old. Not that they are irrelevant, but maybe views have changed on trading vol now from then. If you can help me narrow down on the best show and episode to start, would be much appreciated. I want to start from the beginning and learn it all. Oh. Thank you, and I look forward to hearing from you, and thanks again for offering such an amazing podcast website. Well, thanks again for your feedback there, Mr. or Mrs. Option SIBO. You kind of ask a couple of different things. You want to ask about trading vol, but you also say you want to learn the A to Z about options. So I'm going to take it that you probably want to start with, even though your handle is Option SIBO, you want to learn about options from A to Z. So if that's the way you want to take it, and I can understand this too. This is actually an interesting question. We do offer a lot of shows. We've been doing this now for 13 freaking years. Coming up at the end of January, I think we're kicking off our 14th year here. So it's a lot. I understand. It can be almost overwhelming. This apple we give you to bite is just as big as your head. So maybe that might be an interesting idea to maybe create a new to the network kind of feed so we can kind of start you off with a curated. I've been saying for ages I'm going to make a best of feed. Maybe we'll do that too to make it a little bit fun so we can help surface some of this older stuff. Because you're right, there is stuff in there that's over a decade old, and some of it is still great, some of it is more timely. And so we have to kind of maybe sort that for you a little bit, because you're right, diving into that feed just willy-nilly can be intimidating, to say the very least. So if you want to learn from A to Z, from options, there's two places you need to start. First off, Options Bootcamp, that's what that show was designed for. And that goes in order. So start at episode 1. It's all evergreen stuff. So even though the firms have changed, the people on that show have mostly changed. Dan and I have been on it from the beginning, though. But other than that, we've had a great rotating cavalcade of stars on that show. And that show is designed to teach you options pretty much from A to Z. That's what that show is designed for. And it's mostly evergreen. So you can dive right in on that show and consume all of those episodes. Quite a few of those. Pushing 100, I think, there as well. So check out that one. That's an easy one. You can consume that at your leisure. I would also say, while you're doing that, or maybe after, depends how far into Options Bootcamp you get, you should also do Options Playbook Radio. That's a much more bite-sized one. It's about 15 minutes every week. So you tune in, and you start from A to Z, and Brian starts you there going through his playbook from A to Z. So those two shows, mostly evergreen, easy to consume at your leisure, and you can start from episode 1 of both of those. And if you go through both of those shows, the Options Playbook is closing in on 300 episodes. A lot more going on there, but they're shorter episodes. So if you can consume both of those shows in their entirety, you're going to be really well suited to enjoy the rest. Then you ask which episodes of the other shows to dive into. That's a more considered question. I need to mull that over a little bit of where you should start. And a show like the Option Block, for example, 800 plus episodes. We've been doing this for quite some time as well. Where to start with this show? That's a good question. So that's something maybe we need to create like a new to the network. Maybe that might be helpful to help kind of sort this through. So this gives me some good food for thought as well, which is why I like questions like this about how to make the network less intimidating to newcomers and easier to navigate for newcomers. This is a good question. So I think, but definitely those two are great starting points. And then if you pick up Option Block or Vol Views anytime in the last year or two, that stuff's all highly relevant. Maybe you want to kick off both around the election, 2016, because there was some great content there. We did the live Vol Views show, me and Russell. That was a great show. See how Vol kind of changes, and you can see how Vol has played out over the course of these past couple of years. 2017, a huge surprise for everybody on this network because Vol went away. No one expected that with this administration. 2018, more along the lines of what people expected. Vol came rushing back in. pretty aggressively many times over the course of that year. 2019, another interesting one to kind of dive through. And you can kind of go through, if you want to maybe jump through some of the areas where we're breaking down what's trading that day, you can always obviously skip through that and get to some of the other discussions we have on those shows. But that might be a good starting point for those shows as well. And of course, this show even individually has episodes and segments like the strategy block and other things that are entirely evergreen that you can always enjoy whenever they came out. So interesting question, not just from you, but for me to really think about how we can present this in a less intimidating way as we're kicking off or coming up on here. Our anniversary is quite soon, sometime in January. I think the first episode hit the network, I think it was January 24th, but I do believe that was our Options Insider radio show, which kind of kicked it all off. And, of course, the website, I do believe, was live on the first of the year. So we're already at our anniversary. But January as a whole is a celebratory month for us here on the network and, indeed, on the website. So this is an interesting question. I want to mull this over a little bit more. But Mr. Vol, that's a good handle, Mr. Vol. Mr. Rock Lobster, he does ask, too, about, he wants to, at the end of his journey with our content, he wants to learn about trading vol the option pit way. So do you have a suggestion for shows or content in addition to heading over to Option Pit where he could learn said trading of vol the option pit way, sir?
Well, obviously, we do give classes and all that stuff. But what show would be the best? I think the Vol Views is a pretty good show for somebody learning. What I would suggest is, also there's books. Get books on Amazon right now, not too expensive. There's always Natenberg. I think that's a good place to start. A lot of my students like Ewan Sinclair. Like there's Bill Luby. There's a lot of besides Option Pit. Obviously, we have. I don't think there's. I'm trying to think of, but I don't think there's any education services that actually taught a guy to be a floor trader and sent him back to the floor. I know we're definitely one, but I've not heard of another one. So as far as learning how to trade is, one thing I would say is if you really want to learn how, you got to put your time in. Spend a year trying to figure things out and learn how things work. It seems to be the people that have done the best in Option Pit. We've had students, they like the infrastructure and the chat room and the ideas now that come by. We don't have a whole lot more to teach about trading options, but they like the trade desk aspect of Option Pit once you've kind of been around for a while. But they started to learn what was going on, and they're trying to keep a disciplined routine. And I think ultimately that's what you're going to need if you want to learn to actually trade, and trade or investing, either one. But as far as this show goes, I think Vol Views is a pretty good show for just strict volatility. If somehow you could look for all of the strategy blocks, and then there's Options Playbook, I thought that's a pretty good basic starting show for somebody. And if you want more advanced options and things like that, use somebody like Option Pit like us, where obviously that's what we do. We have sheets that help you identify vol arbitrage. We have so much stuff to help people learn how to trade better. I can't possibly even describe it right now as much as I'd like to, but I think that's the way to start. But I would start by reading a couple books too, and even our friend Dew over there, he does a free short vol podcast. We don't really do a lot of that type of free podcasty stuff, but that's another one as well that you could think about.
I never thought of my network as leading to teaching people to trade vol the option pit way, but c'est la vie. To each their own. Yeah, Bootcamp, Options Playbook Radio, two great places to start. Evergreen, you can start at episode 1 of both of those and work your way through. And by the time you get halfway through each of those feeds, you should say to yourself, I feel much more confident in my options knowledge, my options wherewithal, my understanding of this space. And maybe then you dive into some of the more recent episodes of Volatility Views, and indeed this program, a fun one as well, and those will kind of serve you well as you're navigating. But that's an interesting question for me and the team here. Maybe an interesting thing to revisit as we're kicking off a new year here, how some easy, fun ways for you guys to navigate our content, which is, again, you have a lot of it. So great question. We love questions like that. All right, Let's do one more quickie one. Uncle Mike, this is kind of right up your alley here. This comes from PLC4. He or she wants to know, is there such a thing as too much hedging? How many puts or how much of my portfolio should I allocate toward this strategy? As the guy who spends, conservatively 2/3 of your day, Mr. Uncle Mike, rolling and finding ways to pay for puts, what do you have to say for Mr. or Mrs. PLC4, sir?
Yes, there is a thing as too much hedging. One of my favorite story that I like that I've told often on this show, I remember I was just wanted to start trading futures one time. This was, a long time ago, well over 10 years ago. And since I don't really do much with futures anymore, but I wanted to give it a shot. And so I went long the 10-year note. I'm like, oh, wait, what if it goes against me? So I bought a put against it. I'm like, oh, but I don't want to have to eat the cost of all those puts. So I sold the call. And so I kept going back and forth with this trade. It took me about a half hour to do. I'm like, all right, have I covered all my bases on this? What if this happens? What if vol goes down? What if vol goes up? And I looked at it, and I'm like, okay, I finally feel comfortable with this trade. I can do this futures trading thing. And so I looked at it, and I look, okay, net position delta, 0, net position gamma, 0, net position theta, 0. And so I went through it all the way down the line, and I legitimately outsmarted myself. And so what I did was I just hedged myself so tightly to protect against anything. I just basically created a position that was the equivalent to being in cash. So it was at that point that I really realized you have to have some skin in the game somewhere. And so where do you want your skin in the game? And in terms of what percentage of your portfolio do you feel you should be hedged? That's a question for every individual investor. For if you are 78 years old and you have your nest egg already built and you're just looking to have a little bit of exposure to the stock market, quite a bit of it. If you're 20 and you're a professional athlete, and let's say that you have a little bit, not necessarily a professional athlete, but let's just say you're 20 and you're just starting off your career, and you have maybe $2,000 to your name because you're just starting to invest in your 401k, I would say 0%. So it just depends on the situation and where you're at with things. But yes, it is possible to overhedge. I know I've done it.
How did I know you'd have a fun scenario for that question? So there you go, Mr. and Mrs. PLC4. Lots of questions. We'll get to more of you on Thursday with the mail block. Now it's time to keep on rolling and go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, our first Around the Block of 2020. Let's see what we have on our radar to kick off the year. Let's start in the land of the pit. Mr. Rock Lobster, sir, what are you watching for the rest of this week until we gather here together again on Thursday?
So is this the first Around the Block of the decade?
It is indeed, sir.
Oh, my gosh. I feel honored to just get that decade going. I like to see the 13 handle again and the 12 handle this week for VIX to really get us past what's going on. I like to see VIX go red for the day today and totally blow off all this stuff and the world moves on, hopefully always in a better way. I'm looking for some retail numbers coming up here. I think Walgreens is in a day or two. Christmas time and all that kind of stuff, how all that's going to play out. So that retail is the next big thing I'm looking for. And lastly, that shiny gold stuff. I got a lot of gold bugs and option pit. And all of a sudden, oil's making a little bit of a move. Gold's making a little move. Even that, I think that silvery metal might be making a little bit of a move too. So just, if commodities, all of a sudden there's a bid for commodities, oil, there's a little demand. So things might not look so bad in 2020. You never know. And I think just the start of the year, people buying that stuff, and maybe some decent retail numbers kind of get things kicked off. So that's what I'm looking at for this week.
You're right. The market's certainly not exactly reflecting all of the headline risk and the saber rattling that's going on in the broader world out there as well. So interesting stuff. Keep an eye. I like your very optimistic outlook to kick off the year. That's very uncharacteristic of you. You being the diehard cynic that we know lurking over there in the land of Maine. Mr. Uncle Mike, you're usually where I go for my dash of optimism in my day. What do you have in store for, indeed, your first Around the Block of the new decade, sir?
if Andrew's that bullish, it's getting me scared because when the cynics become bullish, it's time to get out. Oh my gosh, I'm scared now. No, just kidding. I think that I don't really see the market this year taking a major downturn. It may or may not go up significantly, but I have a hard time believing that politicians are going to let this market tank in an election year. So I don't see that happening per se. I could be wrong. I think you need to protect yourself and be prepared for it in case I am, of course. But with all of the political power that is available to this market, or all the power that politicians have to move the market, whether it's manipulated or not manipulated, whatever, I just don't see a major downturn happening this year. So that's kind of what I'm seeing. We do have a lot of reasons for this market to go up with numbers happening and that type of thing. So we'll see. But in terms of the near term, I think the focus has to be on Iran right now, as well as if a trade deal comes about. And then looking forward to earnings coming up in the near future.
Uh-oh, both of you on the optimistic train. Now I'm nervous. I've never heard such just dyed-in-the-wool optimism from both of you out there. Crazy town. Unfortunately, listeners, that music means we have to bring to a close our first show of this brand spanking new decade. We're back in the roaring 20s, just a century later, listeners. We'll see if we can earn that moniker yet again as the decade progresses. But before we do that, let's go back around the horn, check in with everybody here, see what they have cooking. That may interest you. Let's start with the land of the pit, Mr. Rock Lobster. If our listeners are like, what was their name here? Option SIBO. If they want to be like Option SIBO and they want to learn how to trade vol the option pit way, where should they go? What should they do?
Go to the Option Pit website. We are having a free webinar. I believe it's next week. We changed the date. I think it's the 14th. And get your learning on. That'll be a good way to start and learn all that stuff. So pop on in.
Get your learning on. Learn to trade vol and maybe some other stuff. We were joking last week. They also talk about Apple and Tesla and all the other fun things you like to trade there as well. It's not all VIX and spikes all the time, just a lot of it. And VXX and all the other fun stuff. OptionPit.com, the place to go. And Mr. Uncle Mike, if they want to reach out to you, maybe they want someone to hold their hand from a market perspective or maybe a literal perspective. You offer many services there, I don't know. But if they want someone to hold their hand from a metaphorical perspective in these turbulent market times, sir, where should they go? What should they do?
Hey, if you're concerned thinking, hey, the market's so high right now, I'm just concerned with me losing all my gains, contact me because I can help you with determining right levels of hedging for your portfolio and would be more than happy to work with you. And if you're looking for a financial advisor who enjoys options, I'm your guy. Please contact me. Reach out to stcharleswealth.com.
stcharleswealth.com is the place to go. And on behalf of Uncle Mike, and indeed the Rock Lobster, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for listening live or sending in questions, all the fun stuff that you guys do. Keep it coming. Speaking of keeping things coming, if you're saying, hey, I need more of that content. We haven't done enough over the past 13 years. You need more content in your lives. We got you covered. In about exactly an hour, we'll be coming back here with our old buddy, Mr. Bill, from Senecal Capital, talking about the year that was from a vol, from a trading, from a trending perspective out there on the crypto front. So yes, crypto rundown back here in the new year. Should be a fun one. Stay tuned for that if you're listening live in about exactly an hour. Otherwise, we'll be back again later this week with all your fun, your OPR, all your other fun shows you come to know from us. And of course, back on Thursday, once again, for TWIFO and indeed for more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's MIXLR.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.